Hey everybody, Michelle McFarland here with Exit Realty, the most referred realtor. I am here with Sandra Brown today and we are going to chat about credit.
Hi everyone, I'm Sandra Brown. I'm a mortgage agent with Mortgage Alliance and we're here to help you get your next mortgage and buy your own home.
Yes.
And as we always talk about, right, Michelle, is credit, credit, credit. And Michelle, you've asked me many questions about credit, so go ahead and ask me some more.
Yeah, so I mean, obviously credit has a huge factor in the regards of buying a home. If you don't have credit, your chances of buying a home are a lot slimmer, obviously. So I guess my question to you would be, what can people do? Okay, so first of all, what credit score do they need, I guess, to purchase a home? And then if they have damaged credit, how can they help it? And I guess if they have good credit, what can they do to continue it to be good?
That's definitely a loaded question and many questions within. Thank you very much. So credit score is a very tricky answer because depending on how much down payment will determine whether or not you can qualify for a mortgage. So
okay.
With less than 20% down, there's a lot more guidelines that we have to follow in order to get you qualified.
Okay.
So your absolute, and there's still the absolute minimum is 600 credit score. However, most lenders want to see a 650 to and above, ideally 680 and above, to get you where it is. But it's not always just the number. It's
right.
When we pull your credit, we can actually see your history. And if you have things like collections, and collections happen where a lot of people don't even know they have them. They've
right.
canceled phone bills and stuff like that, and then they go, what? So if you have a collection that you owe, just pay it.
Right.
The longer it's sitting there, the longer it's affecting your credit score.
Okay.
The other thing that affects your credit score is all the credit cards and stuff that you have in your name.
Right.
It's called utilization rate.
Okay.
If you have your credit cards maxed out, your credit score is going to be very low.
Right.
Because it looks like you're living on credit.
Okay. So what's the best, what is the best way to hold your credit card balances? Should it be no more than half all
exactly.
the time?
So what I suggest to people is whatever you do, don't go over 50% of the available credit.
Okay.
That's the rule of thumb. So in your head, if you have a $2,000 credit card, you should say, I have a $1,000 credit card.
Okay.
Because it just gets into good practices of not overspending and not living on that credit.
Yeah.
Because what happens is once you get over the 50% amount, right, available credit, it starts slowing down the rebound of your credit when you've had a hit on it, right? Because every time a lender or somebody like myself or a car company or a bank opens up a bank account, it actually hits your credit score.
Okay.
And reduces it. And then each month you want it to come back up. But
right.
if your credit is at over 50%, it's not coming up as fast as you think it would be coming up.
Right. Okay.
And as a matter of fact, if you're hitting max on your credit cards, your score is actually going reverse. I've seen great customers who have great history. However, 1 month they had, say they bought one of those deferred payments.
Okay.
And it went over the limit, right? Because it's now due and charged. See their credit scores drop below 600.
Okay.
And they didn't even know that was the case.
Right.
So I always say to customers, don't use more than 50% of your available credit.
Okay. Now, one other quick question that I have would be how often, so if somebody's getting ready to purchase a home and they're trying to get their credit score in line with where it needs to be, they can monitor their credit. I know I bank with RBC and they have a credit score available to you that you can relook at, or like you can look at it once a month, I think it is. So how often should somebody be monitoring their credit? Is something like getting a credit score once a month good because then you can closely monitor it, or would you prefer that it be less?
Why I tell you to monitor your credit score is not just to rebuild your credit score, but it's to check to keep an eye on it. Because with the digital age, we have digital fraud.
Right.
And that includes identity theft, where if you're not paying attention to your credit score, how are you knowing if somebody's got your information?
Definitely. Yep.
Not only that, I've actually had clients say, well, I didn't tell so-and-so they can pull my credit report,
Mm-hmm.
right?
Okay.
So keep track of that, because every time your credit score is pulled, for example, car companies are going to hate me here when I say this. Some car companies, when they are going to give you a loan, depending on the person, they may send your application to 5, 6, 7 different types of lenders, and every one of them are going to pull your credit score.
Right. I recall this happening to me personally when I bought my car
Yeah.
5 years ago.
And you, exactly. I think we had the conversation because you're like, I didn't do that.
Yeah.
And I think the conversation we said, well, that's what happens. You thought it was just the lender
One.
itself,
Right.
but it really was 7 people checking.
Yeah.
And it does happen that much.
Yeah.
So little things like that, you're going to keep
Mhm.
track of.
And
You can
I-
also
Oh, go ahead.
monitor your payments and stuff like that. But I will also want to caution you with those free apps.
Okay.
They're not always accurate. They're usually
Right.
off by certain points. A lot of
Okay.
people think, oh, I got Credit Karma, I got RBC, I got Capital One, I got all the free checks.
Right.
But the number is not always 100%. So don't be surprised when you go to the mortgage person or me, and
Right.
they say, oh, no, your credit score is not 700, it's only 680.
Okay.
So that's what I mean by it. And sometimes it's reversed, but most of the time or not, it's actually lower than what you're seeing.
Okay. Now the credit, the reputable credit companies are TransUnion generally. And what is the other one?
All
Equifax?
lenders, I would say, sorry, 90% of the lenders are going to use Equifax.
Equifax. Okay.
And some of them use both. Some use Equifax and TransUnion. And the reason why is there's a discrepancy between the two credit scores, because not all trades will report to Equifax, and not all report to TransUnion.
Or credit union. Right.
So there is and I've seen considerable differences between those two scores.
Okay.
Customers, yes.
Okay. All right. So I always try and tell people, I've made a video about this, about not going and buying like a new vehicle or even as much as furniture, right? Like until they've got their keys in their hand, essentially, they really should be holding off on doing any large purchases until it's time to open that door with your
Absolutely
new
true,
key.
because the whole reality here is the lenders are allowed to pull your credit bureau. You're giving them permission right up to the day they fund that mortgage.
Right. So if they decide to do that the day before you close the deal and you've gone out and bought a car or you've furnished your new home on credit, this could essentially kill the deal.
And that is why you're going to call Sandra.
Yes. This is why you need us now, so that you don't make these silly mistakes.
It's not that. So that's what your mortgage person, if you have a great relationship with your mortgage person and your realtor, they're always going to advise you on what's best for you based on the information they know. And for me, I'm going to tell you, don't do it if you don't have to.
Right.
And then even if you do have to, let's run your numbers, because they may not work anymore.
Yeah.
Because some people are coming to us and just barely qualifying.
Mm-hmm.
So what is more important, having a house on wheels or a house where you put your furniture and have a shower in?
Exactly. Now, I guess one other question would be, I just had it and I didn't write it down. That's this, and now I'm forgetting what it was. Oh,
the other thing. Oh yeah. Sorry. Go ahead.
So CMHC obviously had that new rule implemented of a 680 or higher score, correct?
That's correct.
And then, so Genworth has not implemented this rule. Is this right?
That is correct. So Genworth and Canada Guarantee have not gotten on board with the CMHC rules.
Okay.
So these are three. Remember, there's 3 different insurers. So when you have less than 20% down, 3 different ones that underwrite the deals and we usually find the right one for the customer because everybody's different.
Right.
And CMHC has gotten very tight. They want a 680 credit score or higher.
Okay.
And they don't want you to have debts any more than 3542.
Okay.
Which is humongous, because if you're barely qualifying before, you probably won't qualify with CMHC now.
Okay. Alrighty. So I think that is a good general idea for most people. Obviously, it's a well-known fact that good credit is going to help you, obviously, in the home buying journey. And so I don't know if you have anything else to add, or if I think that's a good amount of information, I think, for most people.
I think the most important thing for you to do is call your mortgage person, myself, 613-933-3339, and I will be more than happy to answer questions that you may have regarding your credit.
Right.
Some questions they ask is how quick can I get it back?
Yes.
So
Okay.
I've had some people where they've had a credit score of 585 in September, and by doing exactly what I instruct them to do, they're up in the 680s by January.
Perfect. Okay.
Which means now they can buy a house. So our goal here is to give you a plan so that you can buy your house.
Exactly. And putting a plan in place so that they can follow it strategically, so that, you know, if they do want to buy a house in the next 6 months, say, as long as we put a plan in place for them to follow, provided they follow it, they should be in a good position to be able to purchase then.
And that's absolutely correct. We can give you the plan. If you don't follow it, then there's nothing like, you know, it's going to hold you up. That's really what it is. And I get clients come to me all the time and say, yeah, but I can afford to pay rent. It doesn't matter. If your credit is no good, good luck on that one. You're going to have, or if you are lucky enough to get something because you have more than 20% down,
right,
you're going to pay high interest rates for that.
Exactly. Okay. All righty. Well, thanks guys for tuning in. We are always here and happy to help you. Again, Sandra's phone number is
613-933-3339.
And then my phone number is 613-885-4361. You can reach us anytime. We are always here and happy to help. Have a great day.
And on top of that, in the future, if you have specific questions that you want answers to or you're not sure about, reach out to Michelle or myself, and we'd be happy to help you with those questions.
Absolutely. Have a great day, guys.
Thank you.